Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service, and I am Shraddha Babla. First, the headlines. Asian stocks continue to decline and are set to post the worst week since March. Sun Pharma's Halol facility has received a Form 483 with 6 observations from the US FDA. That's a Bloomberg Quint exclusive. And veteran investor Mark Mobius believes that emerging markets are the place to be. That's a Bloomberg exclusive. And IDBI Bank has moved to the NCLT seeking resolution of debt-laden Reliance Naval and Engineering. Well, on to some action from the Wall Street. Stocks on the Wall Street ended mixed. Losses were led mainly by technology shares. Abigail Doolittle is here to wrap up all the action on Thursday.
Stocks ended mixed in Thursday's Wall Street session as both the S&P 500 and the Nasdaq fell for a third day in a row. The Dow, however, did climb up 0.1%, so a fractional gain there for the Dow. This is the S&P 500 dropped 0.4%, and the tech-heavy Nasdaq really underperforming once again, down about 0.9%. Not surprisingly, then, tech the big drag on the major averages, overall down about 0.7% as concerns persist around the possibility that big tech could be regulated by the U.S. government. The shares of Apple, Facebook, along with Alphabet and Twitter all down more than 1%. Twitter down nearly 6%, down for its fourth day in a row. So some real concern there for that social media platform, with those shares again dropping in a big way. But the chips, this was where the real weakness was on the day. The chip sector overall, or that Philadelphia Semiconductor Index, the SOX down 2.6%, dragged on by KLA, Tencor, and Applied Materials. Those are chip equipment companies, or companies that make the equipment that make the chips, along with the likes of Micron. All of those stocks down 5% or more. Micron and KLA, Tencor down closer to 9%. So really a big drop there on memory market concerns. Interestingly, though, 6 of the 11 S&P 500 sectors actually finished higher. That really speaks to the degree of the tech selling, a 26% weighting on the S&P 500. Energy also weak. That's a 6% weighting. But even with the majority of the sectors finishing higher, we did have that decline for the S&P 500, a bigger decline for the Nasdaq. Haven bonds and the Japanese yen rallying. Bitcoin, a more growthy or speculative asset class, if some consider it to be an asset class, plunging for a second day in a row. Overall, Thursday's Wall Street session then was risk off. In New York, Abigail Doolittle, Bloomberg News.
All right, some of America's most prominent technology companies and retailers made a last-minute push to convince President Donald Trump to reverse the course on a plan to impose tariffs on $200 billion in Chinese imports. Jody Schneider of Bloomberg News brings us the details in this report.
A good chance that we will start to see the tariffs take effect today in the U.S. Business Day. That will be there. It could be as much as $200 billion in tariffs, although it will likely come in phases. Is what we're hearing, that they won't go ahead and impose everything right away. This comes after a lot of criticism from businesses in the U.S. Retailers are saying that small and medium-sized companies, in particular, won't be able to react quickly enough to make changes, that they're not that nimble to be able to really deal with that level of tariffs. The tariffs so far that we've seen, the $34 billion and then the recent round of $16 billion, haven't really had enough of an effect in the U.S. or haven't had much of an effect in the U.S., certainly not on the overall economy. But business leaders are saying that would change with another $200 billion, and they're really warning against that. We heard from Hewlett-Packard and Cisco saying it could also stifle technology advancements, that it wouldn't just be in terms of hurting the economy. And we're also hearing from businesses that consumers could be hurt in this round. It would be hard to protect consumers, even though the White House has said that's what they had hoped to do, even in imposing the tariffs.
Well, on to a Bloomberg exclusive. Veteran investor Mark Mobius has said that emerging markets are the place to be despite the recent sell-off. In an interview to Bloomberg Television, Mobius talks about the areas he finds value in within the emerging market basket. Listen in.
Look, value, definitely. I mean, we've seen so many of these markets bombed out. There's tremendous opportunities. I'm not saying you jump in with 2 feet, but at least you begin to stock pick. I mean, the beautiful thing about these situations is that there are always going to be winners and losers. even if the Chinese situation gets worse with this trade war and Trump imposes this 20-25% tariffs, there'll be winners in China, and we've got to look for those.
So where would you be looking to buy? Because as I mentioned before, this is the worst sell-off peak to trough we've seen since 2008. And you have to wonder if it's going to be an FX, if it's going to be in bonds, if it's going to be equities, and what country specifics, Mark?
Well, definitely equities, because those are the things that have really been hit hard, with few exceptions. Of course, bonds in Argentina and a few other places like Turkey have been bombed out as well. But we think equities are the place to be. And the countries, we've been just putting together a model portfolio for our new funds. And Brazil figures in very highly in that. India, of course, is very big. Korea is in there. Those are the big ones at this stage of the game. But then along the sideways, we see things like Russia, opportunities in Argentina, opportunities in South Africa, and so forth. So there are lots of interesting things happening in these countries. And you got to remember that individual companies is where you got to focus, because a lot of individual companies are going to benefit from this kind of volatility that we've been seeing.
So, Mark, if there is going to be a turn on EM, and we're looking right now at a chart showing what's happening with currencies and stocks as well, where's it going to come from? Because isn't there a tightening of the Fed that's helping drive this? Isn't there a problem with the trade, as you referred to it, that continues even today? So what's going to turn it around?
Well, I think, first of all, you're going to see a devaluation of the renminbi. I mean, if you're sitting in Beijing and you have a 25% tariff being put into your on your goods going into America, the best defense would be to devalue your currency by that amount. So we could be seeing as much as 8 renminbi to $1. I mean, it's not beyond the possibility.
Well, Mark,
so I think this is the kind of thing you've got to watch for.
By the way, it's not just emerging markets, for that matter, Europe as well. Can that continue, or is there some reversion to the mean here?
No. There's no question that, what's happening in the U.S. is having a tremendous impact. And interest rates are the key. I mean, with the Fed raising interest rates, and of course that's going to continue going on as the American economy booms and as unemployment goes down and the fears of inflation increase. So all of these emerging market currencies are going to have to be devalued. They've already happened, but you'll see more of that. But more importantly, you're going to see these countries being forced to raise interest rates, which will put a brake on the devaluation of their currencies. But that's going to happen. And of course, those people that are heavily in debt are going to be in real trouble in these countries. I'm talking about not only foreign debt, but domestic debt.
Well, emerging markets are the place to be. That's the word coming in from Mark Mobius. But with that, let's take a look at how the Asian markets are faring in trade today. Asian stocks, of course, have continued to decline, and they seem set to post the worst week since March. Now, if you look at Japan's Nikkei, that has extended its opening losses and is trading about 1% weaker. Benchmark indices in Taiwan and South Korea are also trading in the red, about 0.5% or so lower for both those indices. But with that, let's shift focus to the Indian markets. Darshan Mehta is here to set us up for the day's trade and all that's happened in the futures and options space. Darshan, what are the SGX Nifty futures suggest?
Yeah, it's flattish at this point of time. It hasn't fallen as much as most of the Asian markets have fallen. But nevertheless, we have almost 2 hours to go for the market to open, so anything can happen at that time. SGX Nifty just up 12 points, but we are above the 11,550 mark in trade. That's the trend that we're seeing. Let's see how the ADRs managed to pan out. Most of the ADRs were down in trade. Vedanta was down 1.5% after a very strong day the day before. ICICI Bank, Dr. Reddy's and HDFC Bank also managed to come down in trade. Among the gainers, you had Wipro, Infosys as well as Tata Motors. Infosys and Wipro gaining on the back of how the rupee is behaving against the dollar. What happened in trade yesterday? We moved up 0.5%. It was pretty much similar as far as the broader market was concerned, because the mid cap and the small cap end of the market also managed to move up in a similar length. There was traction that was seen on the Nifty Bank, but the PSU banks didn't contribute much as far as the flow was concerned. As far as sector specific is concerned, Pharma was up almost 2.7%, given the fact that Dr. Aurobindo Pharma was up 10% in trade. Cadila was up another 6% in trade. The oil index was up almost 2% in trade. So that was where traction was happening. What didn't do well was the Media Index, which was down 1.6%, post both Sun as well as Z falling in trade. Now, as far as the weekly performance is concerned, Pharma, IT and energy are the sectors that have done well. IT and Pharma obviously on account of how the rupee has been behaving. The PSU Banks Media and the FMCG Index is down, and it's surprising to see the FMCG Index down, fall almost 5% in a matter of just 4 trading sessions. As far as the flows are concerned, FIs were net sellers, DIs continue to buy. If you're looking at how the Nifty contributed, what happened in trade, Reliance, Kotak Mahindra Bank, HDFC and Sun Pharma. Reliance and HDFC both have large weights on the Nifty, and that's why the Nifty was able to pull through. Couple of stocks on the losing end. Bajaj Finance continues to bleed, ICICI continues to bleed, Yes Bank is trading at much lows, and Maruti has a bit of a serious sell-off that's happened. So some of the low-weighted stocks are actually coming down on the Nifty. As far as the futures and option markets are concerned, let's take a look at the Nifty futures. Open interest build up of 3% on the long side. As far as the Nifty bank is concerned, open interest was down 8%, indicating a little bit of short covering that came into the Nifty bank. Now, as far as open interest build up is concerned, basically the range is 11,500 to 11,700. That's where the market is playing at this point of time. Even if you're looking at what happened in trade yesterday, where were positions built, there was this thing. So put writers became much more aggressive since the market actually went up in trade. So they're writing at 11,400 and 11,500, but the range pretty much will be 11,500 to 11,600 at this point of time. As far as the individual stocks in the PCR is concerned, the PCR managed to come up slightly, 1.39. Let's take a look at the Bank Nifty PCR. That was at 0.83 versus 0.64. A couple of stocks that I want to point out. Cummins continues to trade much higher, open interest build up of 21% on the long side. So this one is seeing serious accumulation. You have counters like Shriram Transport, which have fallen almost more than 150 rupees from the recent highs. Open interest build up of 15% on the short side. You have counters like Godfrey Phillips, which moved up on high open interest build up of 13%. And finally, you have counters like Aurobindo Pharma, moved up, was up 10%, but the open interest build up was not as high as it would have been expected.
All right, thank you very much, Darshan, for bringing us all those details. So that was the equity markets, but let's also tell you how the rupee and the bond markets fared yesterday. Saloni Dhanuka joins us with all the updates. Saloni, the sharp up move in the rupee has clearly kept you busy for the last few days, but it's 72 now for the rupee.
So, Shraddha, rupee yesterday breached the crucial 72 mark versus the dollar for the first time to hit a record low of 72.11 levels. A dollar home unit fell for the 7th straight session yesterday, its longest losing streak in more than 2 years. While surging crude oil prices along with trade war concerns largely weighed on the foreign exchange market sentiments yesterday. Well, speaking of the bond market, sovereign bonds declined marginally yesterday as yields ended steady at 8.06%. Well, if you see on the global front, dollar index ended lower for the 2nd straight session on the back of mixed economic data, wherein factory orders came in below expectations, while its non-manufacturing data, that is services PMI data, came in well above the street expectations. So it was mixed cues for dollar yesterday, and if you see now, it is trading marginally higher, well above the 95 mark in the early Asian hours. That apart, in terms of data, traders will watch out for US non-farm payroll data today. A better than expected print will make a stronger case for Fed to hike interest rates in the next policy meet, which is scheduled in September itself. And lastly, if you see euro, it trades lower for the 2nd straight session versus the dollar. And talking about dollar rupee now, it is trading flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade, Shraddha.
All right, thank you very much, Saloni. Clearly, the markets will be watching out for the key technical levels on the rupee as well. Now, let's shift our focus to the commodities market. Jayesh Khilnani joins us with all those updates. Good morning, Jayesh. Let's start with the crude oil, the one commodity which has the largest bearing on the Indian rupee.
That's right. In fact, Shraddha, crude oil did manage to decline more than 1% for the 2nd straight day running now. This is on the back of the EIA report, which showed that all levels of inventory, which is the gasoline, distillate and crushing oil inventory, did see a surprise build up in the US market. In fact, the crushing crude oil inventory was up a 4th week in a row, and gained by as much as 5.5 lakh barrels for last week. So that was the biggest negative that we had in the oil markets yesterday. But shifting focus to the base metal space, the most of the base metals closed mixed on the London Metal Exchange. Copper was up on the back of China when it said that it can maintain the growth momentum that it has picked up. Aluminium, in fact, declined to the lowest level in almost 3 months now. So while we had these news come about, as far as individual base metals are concerned, aluminium and lead were the two that declined in trade, while we had the likes of copper, zinc, nickel and tin, which advanced on the London Metal Exchange. Now, if you look at the Shanghai Futures Exchange, most of these base metals are in fact trading muted, except for Shanghai Steel, which is up about 3%, and this is the best day that it has seen for itself in all of 2018. So we'll have to wait and watch how the entire remainder of the day pans out for Shanghai Steel. Lastly, as far as gold prices are concerned, we have seen some bit of green over there as well. So gold, in fact, inched up for the third straight day and is now trading comfortably above the 1200 mark.
All right, thank you very much for bringing us all those details, Jayesh. Alibaba Group Chairman Jack Ma wishes to be or go back to the teaching profession once he steps away from the role at Alibaba. In an interview to Bloomberg, Ma says that there will be a succession plan at Alibaba in place very soon. Listen in.
I do a lot of things on education. This is because I think education is so critical for the future. So education, environment, these are two things that I focus a lot. There's no one thing is the most important. The most important is everybody do something.
To what extent do you think your identity as an entrepreneur has been shaped and forged by your first love, your first job, which was, of course, as an English teacher?
People don't like me talk a lot because I speak speak in the China and all the forums. That's because I'm a teacher. The only thing I can do is share. I learned so much from Alibaba. I learned so much from the Alibaba journey in the past 19 years. I think it's my responsibility to share. Whether people like it or don't like it, agree or disagree, it's okay. The thing is, you have to share because society give me so much resources, so much experience. You should not waste it. Share with the others. Maybe it's a professional disease I've got, teaching, you know.
Do you miss teaching? Would you like to be back in the classroom?
I miss very much. I think I came to business field it's an accident. I just started to do it. I think someday and very soon I will go back to teach. Go back to education. This is something I have more confidence. I think I can do much better than be the Alibaba CEO.
Well, that would be quite something.
Oh yeah, I love that. I think this is why I prepared the Jack Ma Foundation, rural area teachers, headmasters, kindergartens, all these things that I've been preparing for 10 years. So this is something that I want to devote of most of my time when I retire.
Well, when could that be, that transition?
Very soon you will know that.
So this would be you stepping away from your executive chairman role to focus solely on the Jack Ma Foundation with a focus on education?
Education, yeah.
Would you look at a Bill Gates model, for example, of giving away most of your wealth?
I think there are a lot of things I can learn from Bill Gates. And he's been, many years ago, so people say, Jack, no, Bill Gates. I say, well, I can never be as rich as Bill Gates. But one thing I can do better than him, I can retire earlier than him. Right, I can do something that is for education field. I can do unique, different, and something in my Jack Ma's mind. So I will learn from Bill Gates, Warren Buffett, a lot of great philanthropists in the world. But I want to do something using my own way.
Right. IDBI Bank has moved the National Company Law Tribunal against Reliance Naval and Engineering under the Insolvency and Bankruptcy Code. The state-run lender filed an appeal with the Ahmedabad bench of the NCLT to seek debt arbitration against the shipbuilder. That's according to a stock exchange filing. A similar application was filed by another lender, IFCI, in November last year, which is pending admission. Now, the shipbuilder has a loan of about 5,300 crores, which coupled with interest now stands at about 9,000 crores, according to bankers. Now, Reliance Naval has already proposed a one-time settlement scheme to the lenders, but the proposal is yet to be approved. You can read more about this story on Bloomberg Quint. All right. Let's also see which are the stocks which are likely to be at the center of action today. Nikki Mirchdani joins us with the list of stocks. Hi, good morning, Nikki. What's on your list?
Hi Shraddha, apart from Reliance, we will be also tracking 3 other stocks today this morning. I'm going to start off with Bajaj Auto, which is expected to expand the 3-wheeler and a quadricycle capacity to 1 million ton per year, 1 million per year, following the government decision to exempt EVs and automobiles which are run on alternative fuel from permits requirements. So some reaction on that. We'll also like to keep an eye out on United Spirits, given that the SEBI has now exempted Diageo Group from making a fresh open offer for United Spirits shareholders. And lastly, we're tracking Welspun Corp, which has entered into an agreement for supplying around 220 kmt of pipes for oil and gas project in American region. Now, with this, the order book currently stands at around 15,000 odd crore as compared to the order book that we saw with the previous order win at around 12,000 odd crore.
All right, thank you very much for bringing us that list, a relatively shorter one today, but Welspun Corp is probably the stock that you need to watch out for, might react positively on the back of that order win. With that, let's move on to our next segment, and we have Somit Sarkar who's standing by with the big brokerage calls of the day. Somit, I believe there are a couple of calls on pharma names today.
Yeah, both of them are on pharma companies. So first one is on Nirmal Bang on Sanofi India. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 7,570. Now according to the brokerage, earnings growth for Sanofi Pharma will outpace the revenue growth on the back of the high margin product portfolio of the company. Now going forward, the brokerage is expecting the insulin portfolio, Allegra and Combiflam topical pain relief to be the key growth drivers for the company, and on the back of this, the brokerage is expecting the company's revenue and net profit to grow at a compounded annual growth rate of 11% and 24% over CY17 to CY20. Second we have is IDFC Securities on Aurobindo Pharma. Now the brokerage has maintained its outperform rating on the stock with the target price of 900 rupees. Now according to the brokerage, the Sandoz business acquisition is positive for Aurobindo both strategically and financially. With this acquisition, Aurobindo now becomes the second largest US generics player and adds a niche dermatology segment to its strong oral solids and injectable portfolio, says the brokerage. Now this niche dermatology segment has significant long-term competitive advantage according to the brokerage. Lastly, the brokerage says that Aurobindo remains the top pharma pick in India.
All right, thank you very much for bringing us those details, Somit. Clearly, this sort of highlights the increasing interest in some of the pharma MNCs, given that the big 5 pharma companies have been facing pressure with respect to the US businesses. But another stock that you do need to watch out for in trade today is Sun Pharma. Now, the company's Halol facility has received a Form 483 with 6 observations from the US FDA. Darshan Mehta joins us with this exclusive details. Darshan, just how serious are these observations?
See, so if you're looking at the observations as per se, they don't look serious at all. It's basically to do with some bit of lab equipment, to do with lab records, it's to do with, you know, cleaning of equipment, they do with some bit of training. But 6 is a big number, you know. Just recently they had received a Form 4, they had received an EIR for the entire plant. So let's take a look at some of the observations that have come in. The observation first talks about procedures, basically in terms of standards, identity and strength and purity, isn't serious at this point of time. The second observation that talks about microorganism contamination, and you know, I spoke to some GMP experts and say that, you know, most of the cases it's very difficult, you know, to control this at a very small scale. So they're saying this is also not serious at all. The third observation basically talks about written stability programs in terms of sample size. So that also they're saying it's not data integrity issue. They can be actually come about you know, going about this. They don't need to change anything else here. The fourth observation basically talks about again written procedures in terms of control design to assure identity. So this also is basically a procedural observation that's come in. The fifth observation again, it actually means cleaning. So there were issues as far as cleaning was concerned. A very small thing and a big lapse by Sun Pharma. Nothing serious, but for a company which is dealing in injectable cleaning of equipments and all is extremely important, which they didn't do. And the document cites lack of written records and analysis for detergent residual. That's what it indicated. And the last observation that they spoke about is in terms of responsibility and procedures applicable to quality control unit. So I spoke to some GMP experts, some of the analysts who had actually seen this document. They're saying at this point of time they don't see this as first of all, they're not sure whether this was a GMP for the entire plant or a product specific, but they're saying these are not serious observations. There are no data integrity issues, and they don't see any kind of escalation of these observations into a warning letter or an import alert going ahead.
All right, Darshan, thank you very much for those exclusive details. We'll see how the stock reacts. Not very serious. That's what Darshan is saying about the observations. The stock has, however, run up about 17 or 18% in the last 1 month. So let's see how it will react and trade today. But there's lots to talk about over the course of the day, and you'll find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website. Here they are. Investors may grow more cautious of buying money market funds after IL&FS Financial Services defaulted on its short-term borrowing. This is according to the Indian unit of Moody's Investor Service. And India's largest oil and gas producer, ONGC, has said in its annual report that it may have to share the subsidy burden with the government if crude prices remain at an elevated level. Well, with that, it's a wrap on this edition of Daybreak. All you need to know is up next, so stay tuned to Bloomberg Quint.